Hello there. Happy Tuesday. And I'm going to get started here in just a second. Let me get organized over here. How are you doing today? I'm Carla Moats. I am a fractional CFO, a profit strategist, and a business coach. I work with female entrepreneurs who are ready to get their financial shit together so that they can focus on their zone of genius and up level their business. That's who I work with. And I've spent 30 years in corporate finance and accounting. Also did a stint in public accounting. And part of what we're going to be talking about today is invoicing. And I actually managed for about 5 years. I managed an invoicing group, and we put out 18,000 invoices a month. So the next time you're doing your round of invoices, we did 18,000 a month. We had a team of up to 17 people that did that. And we were about $1 billion company. And so today one of the things I'm going to be talking to you about is invoicing. So I have definitely been there and done that. So today what I want to talk about is we're going to talk about cash flow. It's kind of my theme for this week. And we are talking about ways to improve your cash flow because no business owner has ever told me that they have all the cash that they need. In fact, when I talk to business owners, cash flow is always one of their top challenges, if not the very top one. The nice thing about cash flow is that it's 80% process. On another day, I'll talk about the other 20%, but it's 80% about having good financial processes in place. And what most business owners do is they bootstrap their way, up to high six figures, 7, 8 figures, and they focus on processes in marketing, sales, customer service, fulfillment, and which kind of leaves financial processes are basically just kind of left to just exist. And the cash flow originates with effective business processes. So what I'm going to talk about today is invoicing, because one of the best ways you can improve your cash flow is to speed up your cash collections, and invoicing is a part of that. So today I'm going to leave you with 3 ways that you can make sure your invoicing process is more effective and get the cash in the door sooner. So the first one we're going to talk about is the frequency. It's amazing how many businesses I go into, and when I'm doing discovery with a client, one of the things I'll ask them about, we always spend time in processes, and I'll say, well, how often do you invoice or when do you invoice? And it's always amazing to me how many of my prospective clients will say, oh, whenever I have time, whenever my administrative assistant has time, maybe when my bookkeeper can fit it into the schedule. They'll invoice at least monthly. Sometimes they'll invoice more than once a month. Sometimes they'll invoice weekly. Sometimes they won't invoice weekly. First thing you need to have is standardization, because what you need to do is you need to train your client for when they're going to get your invoice. So let's assume you are invoicing monthly. One of the things I want you to consider is doing biweekly, weekly, or even daily invoicing, because you cannot collect what you haven't billed. And the decision you make here is it's going to depend on a few different factors. It's going to depend on the volume that you have, the size of your invoices. It can even depend on the industry that you're in, what type of services you provide. But one of the best ways you can do it is to move your invoicing so that it's more frequent. Not too many of my clients will do daily, but I try and get people to do weekly. And one of the things you want to have for all your financial processes, you want to have like a monthly calendar, a weekly calendar of exactly what needs to happen when. What I will often find with clients is they are actually doing the invoicing themselves. So the first things I want to correct with my clients is, if you are a CEO and you're making more than $100,000, okay, your job is not to invoice. You need to have somebody on your team that's invoicing, whether it's your bookkeeper, whether it's an internal bookkeeper, an external bookkeeper, or it's an administrative assistant. You need to have somebody else who's doing the invoicing. Your job as a CEO is not to invoice. And to make that happen, you also need to have some standard operating procedures in place. And again, one of the best ways you can do that is to have a timeline for exactly what needs to happen and when. But let's just take a scenario that I'll often see with clients. Let's just say that you bill once a month and you bill on the 20th. And I'm just going to take a scenario and let you see how the timing can affect how quickly you get paid. So let's just take a scenario where you did work, maybe your service business. Same thing can apply to a product. So you can insert, you sold a product versus, you provided a service, but you did work on January 25th. Well, that work won't get billed out until February 20th. So at that point, it's already been 25 days since you did the work. If you have 30-day terms, it's due around, you're going to send out an invoice. It's going to be due from the client around March 22nd. That means depending on how often they pay or how timely they pay, it's been almost 60 days since you did the service. So 60 days is your best case scenario for getting your money. Where if you move your billing up to, say, weekly, you did the work on January 25th, within 7 days, you're going to bill those dollars. So instead of it being, 25 days from the point you did the work to the point you bill, you're going to bill it within 7 days, and it could be less than that depending on what your weekly cycle is. And so again, you're going to be getting, in this case, you're going to get the bill in the hands of the client at least 18 days earlier than otherwise. So number one thing, figure out the frequency that you're going to bill at. I highly recommend you do it at least weekly. I'm not even a big fan of biweekly. I really like weekly. The only way I wouldn't do weekly is if you have really low volume. Okay. So the second point we want to have with invoicing is accuracy. And usually when I talk about this, people are like, well, obviously, it's kind of a no-brainer. My invoice needs to be accurate. But if an invoice goes out and there's an error on it, even a minor error, especially if you're working with large, like Fortune 500 companies, it doesn't take anything for them to basically not pay your bill. So I've seen some really what you would think of as minor issues hold up a payment. So if there's an invoice that goes out and there's an error in it, it may not get caught until it's actually sitting on the desk of the person who's actually paying the bills, which again, if you're dealing with a large Fortune 100 company, and it doesn't even need to be a Fortune 100, but if you're dealing with a company that's doing $20 to $50 million in sales, that has a little more infrastructure, that invoice is usually passing through multiple hands. So again, as part of one of your standing operating procedures, you want to have some type of quality assurance process to make sure invoices are going out on time or are going out accurately. This is especially true if your invoice isn't 100% automated. And by 100% automated, I mean that every single field on your invoice is auto-populates and never requires any type of manual intervention. If that's the case, then once you satisfy yourself that the populations are happening correctly, then you can put some reliance on your automated process. But again, in my experience, most businesses do not have a 100% automated process. They have some type of manual intervention that's happening in some place. So some of the things you want to look at is, are my terms correct? This is particularly important if you have different terms for different clients. Maybe your terms for clients vary by contract. And I've seen cases where invoices are going out with the incorrect terms on them. And companies will reject that because they will, part of what a company's AP review process is doing is making sure that when they get an invoice, that it complies with any contractual agreements that it has. And so if your terms are off, they can bounce your invoice. Billing address and contact. Most companies, you will have the person especially larger companies, you'll have the person you're dealing with, you have the person who actually pays the invoice. Make sure you know who that invoice has to go to. I've seen cases where it went to, say the person that you actually signed the original contract for, but they're not the person that's actually paying the bill. That's not where the invoice is actually supposed to go. So make sure you know where that invoice is supposed to go. Obviously, your description, your pricing, your amounts. I've seen, companies where they're very specific as to how something needs to be invoiced, how it needs to, the description, maybe the description needs to exactly match what's on the contract. If you're working off of a PO, having, a description that matches the PO is important. So make sure your descriptions, your pricing, and your amounts are all correct. Do you have any special customer requirements? We'll talk about this in a second, but I've seen cases where you need a PO, you need a job number, you need a project number. But if you have any special customer requirements, again, if you have any customers that have specific requirements to them, you need to make sure that those are documented in an SOP. Special payment instructions. Are you taking payment via check? We'll talk about that on another day. I think it's tomorrow. I'm going to talk about expediting payments. But where do they need to be able to check to? Do you have some companies will have like a special PO box that payments are supposed to go into. Make sure your payment instructions are really clear. If you're doing electronic payments and you want an ACH, make sure your ACH, your directions for ACH are clear on the invoice. Okay. The other thing that I would suggest you do is make sure that we talked about the special customer requirements. This is especially if you're working with a larger company. A lot of your larger companies now have gone to specialized procurement systems, either homegrown or vendor provided systems that are intended to help them manage their costs. And those systems will have their very own requirements. So many of those cases, your paper invoice, whether it's coming out of QuickBooks or a similar system, actually doesn't do anything for them. They actually need you to turn around and enter it into that proprietary system. And that system may have its own requirements. So make sure as part of your process for onboarding a new client that you know what your special customer requirements are. Okay, so that's kind of accuracy. Another thing I'm going to recommend, we talked about accuracy and frequency, and I kind of got into some details there, but everybody knows ultimately I need to invoice in a timely manner and I need to produce an accurate invoice. Another thing that I'm going to suggest, which very few clients actually do, but if you do, it can be a total game changer, is a proactive client call. What I suggest is that as part of your new client onboarding process, you have a proactive call with the client to go over the invoice. And during this process, you basically review the invoice you make with them. This is, again, an opportunity for you to identify any errors up front, because if, you'd rather have that error identified up front so that you can correct it rather than waiting for it to cross the AP desk and at that point, have to generate a new invoice or whatever. So have a proactive call with the client. And a very important part of this is at the end of this call, you're going to ask them, is there anything that keeps you from paying this invoice when it's due? Flat out ask them. And you want the answer obviously to be no, that when it goes out there, that this invoice, when it's due, will be paid. Keep in mind that most companies, if they're not a small company, and even small companies, I'll see this now, if they have even if they have an in-house bookkeeper, most companies have at least 2 approvals for invoices. The person who was involved in procuring the services and the AP department. When I worked at the larger company, you had the person who originated, you would have the controller for that business, you would have the AP department, and depending on the size of the invoice, it could actually go to like a vice president. So keep in mind, you might need to have this call with both an AP contact, who's the person who's literally paying the invoice, and you might need to have it with your original contact. Again, it's really important when you're working with these clients to know who's actually going to pay your invoice. If it's a really small business, it might be like, an assistant, an administrative assistant, an internal or external bookkeeper. But as you get into larger and larger companies, there will be more and more infrastructure in the business. And the person you're dealing with is likely not the person actually paying the charge. And your goal here is to resolve issues proactively. So if they look at the invoice and they say, oh yeah, it's missing a PO number, you want to be able to resolve those issues proactively. We put this in place, and this at a company that I worked with, and it really helped with our AR collections, because it allowed us to resolve issues much, much earlier, and make sure that when the invoice actually got to AP, there were no reasons, and there was nothing that was going to stop it from getting paid. So these are 3 things that if you put in place in your invoicing process, they will over time speed up your cash collection. So again, don't consider billing weekly instead of monthly. Put a very robust process in place to make sure that all your invoices are accurate, and put in that extra step, that proactive client call, to make sure that your client will give you a yes answer to the question, is there anything, or actually no answer to, is there anything that keeps you from paying this invoice when it's due? I hope these helped you. I just came out with a new cash flow guide, 10 ways you can improve your cash flow. Like I said, cash flow is 80% process, and it takes you through 10 different areas that you can go in your business and tweak to improve your cash flow. You can, there's a little banner running here that will tell you where to go get it, but you can get it at www.carlamotes.com/sign up with us, with a dash between sign and up. And I hope this helped you. All right. And I will talk to you later. Bye.